Ladies and gentlemen, good day and welcome to Q1 FY25 results conference call of Dhruv Consultancy Services Limited, hosted by Kirin Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Jainam Savla from Kirin Advisors. Over to you, sir.
Thank you. Good afternoon, everyone. On behalf of the Kirin Advisors, I welcome you all to the conference call of Dhruv Consultancy Service Limited. From the management team, we have Mr. Pandurang Tandavate, Director, Mr. Ankit Sonavne, Company Secretary, Mr. Snehal Patil, CFO, and Mr. Rohit, General Manager, Accountant Finance. Now I hand it over to the call to Mr. Ankit Sonavne, Company Secretary. Over to you, sir.
Good afternoon, esteemed ladies and gentlemen. I extend a hearty welcome to each and every one of you who has joined us today for Dhruv Consultancy's investor call, where we will delve into the financial results of the first quarter of fiscal year 25. Your participation and interest in our company's performance are highly valued. During this session, we will offer a concise overview of our Q1 FY25 financials, providing insights into our achievements, the challenges we have faced, and outlining our future strategies. But before we immerse ourselves in the numbers, let us take a moment to reflect on our journey thus far. Founded in 2003 and headquartered in Navi Mumbai, Dhruv Consultancy stands as a beacon of excellence in infrastructure consultancy. Our commitment to delivering comprehensive services spanning design, engineering, procurement, construction, and project management has positioned us as a trusted partner in the realm of infrastructure development. Our diverse service portfolio includes meticulous preparation of detailed project reports, conducting feasibility studies, and specializing in operations and maintenance works. Let us now delve into the prominent achievements and milestones attained during the Q1 FY25. In our recent quarter, the company has demonstrated significant achievements in Q1 FY25 with several key milestones. We have been shortlisted in collaboration with Architecno Consultants in India Private Limited and Innovative Engineering and Development to submit a request for proposal, that is RFP, for consultancy services for the expanded Dhaka Water Supply Resilience Project. Our role will encompass project management consultancy services, including detailed engineering surveys, design, drawings, tender document preparation, and construction supervision. We have been shortlisted along with Tricia LDA-AS for consultancy services for the government of Mozambique. This opportunity involves the evaluation of high crash locations, design of road improvements, preparation of tender documents, support to A&E during the bidding period, and supervision of implementation of the works. We have been awarded a 5.7 crore contract by the Gujarat State Road Development Corporation Limited. The project involves providing consultancy services for constructing a 24-kilometer, 4-lane high-speed corridor between Vataman and Pipli on State Highway number 6 under the hybrid annuity model, that is HAM. Looking ahead, Dhruv is strategically shifting its focus from the domestic market to international markets for financial year 25 and 26. The company aims to target large-scale projects above 50 crores, such as coastal roads, expressways, iconic bridges, and sea links to significantly enhance its revenue growth. With plans to venture into African countries including Tanzania, Zambia, Uganda, Mozambique, and Kenya, as well as Gulf countries, like Saudi Arabia and Dubai, Dhruv is positioning itself for substantial global expansion. As of now, the company's total order book stands at 646 crores, including unexecuted order book of 303 crores approximately, indicating a strong pipeline and promising future. Now, let's take a closer look at company's financial performance. In Q1 FY25, Dhruv Consultancy Limited reported a total income of 20.02 crores, reflecting a strong year-over-year growth of 73.83%. The company's EBITDA reached 2.82 crore, showing a modest increase of 2.12 crore compared to previous year. Profit after tax stood at 88 crores. Earning per share remained stable at 0.55 rupees, consistent with the last year's performance. These results underline the company's solid revenue growth and steady financial position. The dip in the profitability is mainly due to higher mobilization expenses in the initial project period, which will be settled over a period of 1 year, reflecting our strong profitability growth. Before we proceed to the interactive session, I would like to extend a heartfelt appreciation to our esteemed stakeholders for being indispensable contributors to our journey of growth. Your unwavering support has been a cornerstone of our success, and we sincerely value your significant role in our achievements. Now, I invite you to engage in question and answer session. Your insights and inquiries are highly valuable to us. Thank you once more for your presence and ongoing support. Let's delve into the discussion together. Over to you, sir.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for the moment while the question queue assembles. The first question is from the line of Shaili Jain from Silver Oak Finance. Please go ahead.
Can you elaborate on any specific partnerships or collaboration initiated at the conference with other international stakeholders? How might these relationships influence your future projects?
Yes, we are definitely need a collaboration when we are bidding internationally, because the condition says that you have to take the local partner. In few of the cases, we have to deal with the local currency and local language. So local partner strategically is needed, and we are very much careful while selecting the local partner.
Okay. So given the board participation from delegations across Africa and Asia, how does Dhruv Consultancy plan to leverage the insights gained at this conference to enhance its market presence in this region?
We are attending series of conferences happening internationally. Mainly, we are thankful to FICCI, who are inviting us in few of the cases. We were the only Indian representative. Recently happened in Tanzania, and in that B2B meeting happens with our team. Also, we had one meet at Sri Lanka, wherein High Commissioner of India in Colombo himself took initiative to open the dialogues with various stakeholders or clients for us to enable us to grab the opportunities. So it is a continuous process, and we are using that platform as a business expansion opportunity apart from the tenders which are available globally now on the websites of the World Bank aided projects or African Development Bank aided projects. And also we are in touch with Exim Bank for getting ourselves empaneled. So this is we are desperately trying to enter into international market at government from government side as well as in the private sector.
Okay. So given the scale and duration of high-speed corridor project, how will Dhruv allocate resources to ensure successful execution without affecting other ongoing projects?
See, high-speed corridor projects, right now we are doing expressways. We have already 8 expressway projects under our belt out of 12 which are in India. And high-speed corridors, it is, you can say, multimodal corridor project, wherein the development doesn't happen in one go. First, normally they do construction of road by acquiring the sufficient land width. In second phase, they go for the multimodal mode, mainly the metro or railway. So that comes maybe after 10 years or 15 years. So it is, I can say, the high-speed corridor only consists right now for the roads only in India.
Okay, sir. Thank you.
Thank you. The next question is from the line of Jay Shah from Join International India Private Limited. Please go ahead.
Hello.
You're audible, sir. Please go ahead with your question.
Yes. So my question was, what is the execution period for our order book, and what is? Yeah, that was my question.
Our order book, as on now, stands roughly to the extent to the amount of 300 crore plus, and the timelines almost all the clients are 36 months. That is the main construction period, and after effect liability period, wherein very few, I can say, percentage of amount, maybe 10 to 15% of our fees is payable in another 3 years. So I can say with working with a EBIT of 20% plus, our profits are booked in initial 30 months only. So straight answer to the question is, order book shall be executed. 90% of the order book shall be executed in a period of 2 to 3 years.
And my second question was, what is the export contribution in total order book?
As on now, 0. But I can say it will start adding definitely with current calendar year end. Maybe 2 projects we are aiming at government level, and 1 or 2 projects at private level, and 1 or 2 projects at Exim Bank level. As a consultant, various capacities, 140 plus expression of interest are submitted, out of which results are only 30 are out. The evaluation processes are very, very slow in international market, particularly the World Bank aided projects. And we are qualified in 22. We have submitted bids for 10 plus. We are responsive bidder in 4 plus. But again, for example, the Dhaka, we were on the verge of getting the things in line in this month only, but there is unrest now. And further 1 week delay is there for opening the financial bids.
Okay, sir. Thank you.
Thank you. The next question is from the line of Pranav, which is an individual investor. Please go ahead. Mr. Pranav?
Hello.
Mr. Pranav, you may go ahead with your question.
Yeah, so my question is, delay in payment receipt.
Hello?
Hello.
So please repeat your question. You are not audible.
Yeah, any delay in payment receipt?
See, our payment cycle for supervision work, that is we call authority engineers work, is for NHI it is 45 to 60 days. For Ministry of Road Transport and Highways, it is from 90 to 120 days. For other clients, it is I can say 60 to 90 days. So average receipt of the supervision work is 60 to 75 days, which is 100% guaranteed, because we only work with the clients where there is a sufficient fund provision and where there is a good budget backup and good, you can say, payment mechanism. As far as DPRs are concerned, which are contributing only to the 20% of our order book, DPRs payments are based on the milestones, which is again dependent on how fast we deliver the things. So payment is not issue from the client side. As far as we are concerned, we are very selective while selecting the client.
Okay, sir. And my second question is, what are company's strength and competitors?
Company strength, I can say, it is a technical strength wherein the consultancy projects are awarded. When we enter into business in a large way in 2014-15, we were scoring 85 marks technically out of 100. And financial marks are 20. So if I quote I am the lowest financial quoter, then I will get 20 out of 20. Now technical weightage is given 80%. So from 85 in 2014, 10 years down the line, we are scoring now minimum 95 in each of the assignments. So this technical score enables us to quote with a higher quote, that is extra profitability or EBIT. And secondly, the good chance of winning the bid because we are technically highest. Now there are only 4 to 5 competitors in this industry which score 95 plus marks. I can say, considering all the clients pan-India level, all the opportunities in 30 plus states of India, including the union territories, there are maximum 10 to 12 competitors. But I should not say, but few of the competitors in recent past are debarred by the client for service issues.
Okay, sir. Thank you.
Thank you. A reminder to all the participants that you may press star and 1 to ask your questions. The next question is from the line of Ayush Agarwal from Maple in Value Investing Fund. Please go ahead.
Good afternoon, sir. Thanks for the opportunity. Sir, I'm new to the company, so maybe I'll spend some time on our past numbers as well. We saw very good growth from 2015 to 2019, and like you said that our technical score was increasing also at that time. But sir, if you see after that, growth has normalized for us when we touch the 60 crore kind of mark. And in the last 3-4 years, a lot of government projects have happened. So if you can talk about why could we not grow and what are we doing to change that?
See, our order book, as initially I told, it consists of 2 parts. One is the 30 or 36 months construction period, and similar 30 to 36 months defect liability period. I am now working on the orders 4 years back or 3 years back, which were in a competitive way, and because our technical scores at that time were 91, 92. Also, you have to consider the COVID impact in last 5 years. The COVID impact was there almost all over the world for 2 years. So if you remove that 2 years of the COVID, our performance is consistent. I am not saying it is abnormally high or even very good growth. But what happens again, this 2 years COVID and 1 year is an election year. All the government machinery is focused on shutting down the budget for the 5 years. And our main client was the NHI and MORC, and of course the central government, central elections were on card. So there was a straight impact on the order book as well as the payment receivable because of code of conduct. All the government machinery is focused only on the elections. That is the priority. Now, what I can say that stable government is now formed in the month of June, and 5 years plans are ready for this government. Almost 95% of the plans are continued for NDA government, which was Modi 1, Modi 2 previously. And now, if you see the Prime Minister's speeches or recent announcement of the various infrastructure ministers in the parliament session, they always say that they are going to double the performance in coming 5 years. and we are the front runner to get the benefits of that. Just I will explain. Our order book, when I say unexecuted is 300 crore plus today, we have submitted bids for 1,000 crore as on now after the elections, after the code of conduct. The results are before also from January onwards, and the results of them are now coming out. We also widen our base other than central government departments to the state governments, again focusing mainly on the Maharashtra because we are Mumbai-based company. And in Maharashtra, we found 4 good clients. One first client is a MSRDC, who have come up with a ring road, Pune, Alibag, Virar multimodal corridor, and we are shortlisted there, and we are hoping to get sizable order book in another 1 month or so. And second client which is new to the infrastructure is a MSIDC, Maharashtra State Infrastructure Development Corporation, wherein we are empaneled along with 15 consultants to bid for the 15 packages. So one work is guaranteed to us. We may get 2 also. Thirdly, we focused on PWD also because I myself is from PWD, retired government officer, wherein we again concentrated on ADB funded projects and HUDCO funded projects where the funds are guaranteed, and we are on the verge of getting the contracts there also. So in short, my order book of 300 crore should reach to 700 crore by end of the financial year. Effect of COVID and effect of elections is now null and void for next 5 years.
This was a very helpful answer, sir, and quite a detailed one. So next question is given the increase in order book that we are expecting, and consultancy is an employee-heavy business, so do we what are our current employee strength, and where do we see that number going in the next 1 year given the increase in order book?
Increase in order book has no direct relationship with number of employees because most of the employees who are working on the project, their assignments are project based, or you can say on contract based. Once the project is over, assignments are over. Now, whatever the projects I was assigned in 2016, 17 and 18 are getting closed or got closed, and another 15, 16 projects are getting closed this year. So all that you can say company employee strength will be reduced. Today we have 350 plus employees on board, out of which only 50 are you can say non-project based appointments, and 300 are project based appointments. So the original completed project people are getting retired or you can say concluded, and new projects are coming up. So mota moti I can say 350 plus employee strength will increase by another 50 to 70 in number.
To execute the incremental order book.
Of course, because it is plus minus, it is like share market, plus minus always.
Okay, got it. Sir, my next question is, on the international orders, and you sound very optimistic about them. So if you can tell us what is the opportunity size there, and when do you see things happening on that front?
Like I explained, Dhaka was on the we getting it because technically we scored highest number. I cannot disclose it because they are not on the website, and I have not informed to the exchanges also. But we were able to get the success at the end of August in Dhaka, but now unrest is there, and now things will get delayed for 15, 20 days, I don't know. Secondly, we are most responsive bidder in Tanzania for 2 out of 4 projects, wherein we scored H2 number. I can say we are H2, highest technically number 2. And number 1, somehow in one package they are backing out. So now they are negotiating with us to match to the H1 number, which is financially lower than us. And we are evaluating the possibilities of matching that. So what in short I can say, we will definitely get at least 1 to 2 orders whatever we have submitted the bids for various fund, World Bank and African Asian Development Bank funded projects. Also, we are getting few opportunities through our own sources and efforts to work in a private sector through Exim Bank, also through the FICCI efforts to get some assignments in a private sector. So I can as on date my number is 0. I cannot commit any future thing for international market. But once we enter, then we will definitely grow in multifold, because the opportunities are there in 15 to 20 countries, not only one country.
Okay. Got it. Sir, final question from my side. Given the expected increase in top line, and you mentioned that not a lot of employees will be added, so can we expect margins to go back to 20%, 25% EBITDA level?
Definitely. Reason for that, two reasons for that. Number one reason is international market, we don't bid below the 35% EBIT, because we are working in, we are batting on unknown pitch. We are working in unknown conditions, and it will be our first assignment. So we are not going to take any heavy financial risk. If we get the work, okay. We don't get the work, that is also okay, but we will not work. We will not go very competitively to begin with. Straightway again example of Dhaka. Second is our technical marks now reach to the apex, almost 95 plus we are scoring. And since we have now successful in raising 33 crore plus funds, only exchanges approvals in principle are awaited. But investors are ready to deposit the money once the formalities are completed. So with that money, I am going to buy some extraordinary equipment, which will give me more marks in number. So that 95 should reach 96 or 97. Then I will not be beatable by any Indian competitor in terms of technical strength. So more the technical strength, more the EBIT. 1 mark extra carries weightage of 50 lakh. So if I score 1 mark more, so 50 lakh, so average assignment is about 10 crore. So you can imagine almost 5% profitability will be increased without any expenses. So EBIT we are eyeing at 20 to 25%. Current year definitely 20% plus.
Okay. Understood, sir. Sir, I'll come back in the queue. Thank you.
Thank you. The next question is from the line of Gunit Singh from Counter Cyclical PMS. Please go ahead.
Hi, sir. Given the current order book, what is the amount of revenue that we expect to recognize in FY25? What kind of growth over FY24?
Question. It is a future. I feel it is a perfect number. I cannot commit on the earning call.
Yeah, so directionally, are we looking at any growth internally, like 25, 30?
I explained to you, order book will definitely be doubled. So you can imagine, and EBIT also will be increased. So you can imagine the top line current year and next year also.
I'm sorry, sir. What did you? Can you please repeat that again? Your voice was unclear regarding the order book.
Order book, as I explained in previous discussion, order book is expected to be double. Today it is 300 crore plus. It is expected to be double by end of current financial year, because now there are no restrictions for the code of conduct or anything. And we already put our bids, financial bids are opening now. That is one thing, what I explained to you. Secondly, since we are scoring more technical marks, so we have already started bidding with better EBIT or better profitability, because we are now sure getting more technical marks. So profitability will also increase.
Right, sir, got it. And so what is the execution time for this? You mentioned 30 to 36 months, right? So most of the orders which are
for construction period and 30 to 36 months for defect liability period. But our chunk of the revenue comes in construction period only. So we can consider 3 years comfortably.
All right. So most of the revenues from the new order books would be recognized probably say in FY28 or something like that.
That will be at the end we get low revenue, but order book will always go on increasing, because international market, once we enter, we are going to hit success everywhere in all countries, because again there we are scoring good technical marks. So order book will definitely increase, and ticket size in international market is much more than the Indian ticket size. It starts from 25 crore in INR. Here it ends at 10 crore average, I'm saying.
Right. So got it. Sir, who do we consider as the main competitors in this space?
I can name few of them. Louis Berger Group, America, Scott Wilson, US, UK, their Indian arms, of course. AECOM Asia, again, US based main client. They are the multinationals. Then in India, SA Infrastructure, Malviya, then Feedback, then RV, and one or two more. So they are our competitors.
All right, sir. And sir, currently, what portion of our order book is from Indian market and what portion is
100%
from...
Indian, 0 international.
All right. And sir, with the order book doubling in, do we expect any international orders coming in?
Definitely, at least 2.
All right. So, I mean, at the end of FY25, what portion of our order book do we expect to be from India and what from abroad?
As on today, order book is 100% India, that is 300 crore plus. Additional 300 crore, I can expect only 50 to 100 crore from international market, even less than that. Because all of sudden uncertainties happen in international market, and we can't imagine that, because we have put our bids to 15 to 20 countries, not one country. Few of them are politically volatile.
All right, sir, got it. Thank you very much. Wish you all the best.
Thank you. The next question is from the line of Yashwanti from Coaching Finvest Private Limited. Please go ahead. Hello.
Thank you, sir, for the opportunity, and congratulations for the great run in the top line. Sir, you mentioned it is a mobilization extension that has taken pressure on your EBITDA margin, but by year end, what kind of a margin we can expect?
20% plus. Last year we touched 17% plus. Forget about quarter to quarter, because quarters are not giving correct pictures. But year on year, if you see, our EBIT has been increased year on year post COVID. Last year it is 17% plus. Now this year we are expecting 20% plus.
Okay. So you also explaining about your score of around 95 to 96% that helps you to gain contract.
Madam, your voice is cracking.
Am I audible now?
Yeah, you are audible now.
Yeah. So you explained your qualification score of around 96% in domestic market. The same score is also applicable when you proceed for your export orders?
Yeah, definitely. Not exactly 96, but there we score 92, 93, sometimes 95, but 90 plus, and which is a good score as far as international competitions are concerned. In India now we are, as far as infrastructure, road infrastructure is concerned, we are touching to the international level. So road infrastructure industry is now better than, I can say not world, but better, or we are in top 5 as far as highways are concerned all over the world. Obviously the technology and the quality of manpower and the quality of consultants, they are also too good in India compared to international market, because we are only focusing on underdeveloped or developing countries wherein we are putting the bid. So there is a limitation.
Okay. And sir, the margins are comparatively better in the overseas market, you said, right?
Yeah, because we are working in unknown condition, we are not bidding below the 35% EBIT. Whether work is ours or whether work is not ours.
Okay. And if you also mentioned that you need to be within local partners. So
we have to take the local partners.
So what kind of partners normally?
We have to take the local partners, but they are normally associates. So their role is only for local licensing and local language issues.
So for any contract, we will be having the major share of around 75% to 80%.
Always we are lead partner. Always.
Okay.
So the money will come in our accounts only.
Okay. And then you will be paying them off.
Yeah.
Yeah. So there is two more questions. One is why more focus in the African and Dubai and this market? Is an opportunity is better or the comparatively the profit margins are better?
No. See, in India, we are saturated, almost we are in top 5 now. We are the only public limited listed company in highway sector, consultancy. And now we want to expand ourselves beyond the borderlines. Basically, why Africa? Because African Development Bank is funding in Africa for road development works like anything. And our technology, our knowledge, our know-how, our intelligence will prove useful to work there with better profitability. As far as Dubai market is concerned or Middle East, we are not working, we are not focusing to work with government sector. We are focusing to work with a private sector because the private sector, they are very much, you can say, focusing on the quality and progress issues, not on the money part. Here we are getting 2 to 3% as a consultancy fee of the project cost. And in Middle East, the fee starts itself from the 5%.
Okay. And the profit margin is again 30% plus.
Of course, obviously, if you are making your fee double, so things will be much better.
Okay. And so when you employ or when you take any projects in the overseas market, say for Africa or say for any Gulf countries or Dubai, you can say, normally we have to source the talent from India or we have to take the local talent over there?
Key professionals or the top level people, engineers, they are only from India. But support staff and middle level staff can be from the local market to save on the cost.
Okay, so the comparatively cheaper on the locals,
Of course.
Okay, so thank you so much for the explanation. I'll join that in queue and wish you the best for the next part.
Thank you very much. The next question is from the line of Pooja Gupta, which is an individual investor. Please go ahead. Ms. Pooja, you may go ahead with the question. Yes.
Am I audible to you?
Yes, you are audible.
Yes. So my question is, are we looking for office in overseas market to handle projects there?
Can you repeat, ma'am, question? I couldn't hear properly.
Yes. Are we looking for office in overseas market to handle projects there?
No. We directly handle the overseas projects. We don't outsource anything.
Okay. And my next question is, what is the budget benefits to the company?
Budget?
Benefits.
Sorry.
Budget benefits to the company.
Can someone repeat the question? I couldn't hear it. Hello.
Ms. Pooja, please repeat your question with no background disturbances.
Yes. What is the budget benefits to the company?
Budget benefits, when you are saying budget of what? Who client? Because normally our order book is with Government of India right now, wherein we are working with Marth and NHA. If you ask that budget or union budget, which was in June, I think, June-July, the budget has a direct influence on our order book and revenues.
Okay.
Ms. Pooja, does that answer your questions?
Hello?
Does that answer all your questions?
Yes.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Ayush Agarwal from MAPL Value Investing Fund. Please go ahead.
Sir, one question from my end. Despite having a low fixed asset, our depreciation is very high. And earlier it was not the case before 2022. Any change in depreciation policy? I understand that right of use asset must have been classified under fixed asset. but despite that also our depreciation seems very high.
Depreciation, I think, comes with the asset. We have acquired quality equipment in last 2 years to score more marks technically. So obviously, because of more asset acquisition or purchase, depreciations are on higher side.
Okay. But as a percentage of gross block also, it looks very high.
Percentage of?
Gross block.
I can't understand. Rohit, can you answer this question?
Yes, sir.
Please answer.
So can you please repeat the question?
Yeah. Hi, Rohit. So I was saying that despite having a low gross block, our depreciation seems very high. So why is that the case?
No, because these assets which Pandurang sir just described, these were acquired last year in 22-23, and the term is for 5 years.
How much would be from depreciation of leased asset, and how much would be like core depreciation in the 5 crores in FY24?
Yeah, approx 40% is for the leased asset.
40% is from leased assets.
Yeah.
Okay. And another question, Rohit, for the last 2 years, FY23 and FY24, our tax rate was low, around 14-15%. So what's the reason for that, and when can we see tax rate normalizing?
Yeah, since our turnover is less than 400 crore, we are opting under lower tax regime, lower tax benefit.
So till when can we have this benefit?
Till the time we have a turnover of less than 400 crore. Once we cross 400 crore, the normal tax rate will apply.
Got it. That was helpful. That's it from me.
Thank you. The next question is from the line of Kush Tandon from Ananta Capital. Please go ahead.
Good afternoon, sir and madam. Thank you for your time. Congratulations. I am seeing, sir, the order book is very interesting for us. Can you give some growth guidance for the year? How much of this will be executed? If you can talk on the execution timeline, sir.
Definitely. Unexecuted order book as on today is 300 crore plus. So which is to be executed in another 3 financial years. Because half is over now, 2.5 financial year. And what I can say, order book, now the Maharashtra state government elections are due somewhere in October, November. And they are concluding all their assignments of infrastructure projects, which also includes our consultancy assignments, in the month of August and September. So we are expecting a huge expansion or increase in our order book by end of September.
Okay. And sir, so if we have a 300 crore order book for 3 years, can we expect 100 crore revenue from the current order book in this fiscal?
Definitely.
Okay. And we are also expecting to win more orders in coming quarters, sir.
Yes.
Okay, sir.
We are expecting to make our order book double by end of this financial year.
Okay, sir. So what you are saying is there is a possibility of our unexecuted order book at 600 crore by March 25.
Correct. Perfect.
Okay, sir. Okay. And sir, if you, let's say, win new orders, some of those orders will also be executed in this current financial year?
Definitely, because everywhere there is a provision of advances, mobilization advance. So we would like to take that opportunity. Few of them are interest free. So we would like to take that opportunity to improvise on our cash flows. And definitely revenue will be much better in current financial year also.
Okay, sir. And typically, sir, quarter one is little slow for infrastructure projects and even quarter two because of rain and all. So, sir, are we expecting the next few quarters to be better than the first quarter?
Second quarter should be better than first one, definitely, for the reason first quarter totally impacted on code of conduct. The new government formed in June, so almost out of 3 months, 2 months were gone and 1 month for initial mobilization of new government. So what I can say, the spillover of Q1 will be captured in Q2. So nullifying the effect of the monsoon. And Q3 and Q4 definitely we will fly very high.
Okay, sir. Okay. And sir, any last year we did 17% EBITDA margin, sir, FY24.
Yeah.
Sir, any margin guidance? This quarter margin has come down a little bit.
Don't go on quarter to quarter. As I said, because of that code of conduct impact, Q1 was very passive, I can say. But overall, as I already explained, we are expecting this year to make the EBIT crossing 20%. As far as year is concerned.
Okay, sir. Okay, sir. Okay, sir. Thank you. All the best, sir. All the best.
Thank you. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Jainam Savla from Kirin Advisors for closing comments. Mr. Jainam.
Thank you everyone for joining the conference call of Dhruv Consultancy Services Limited. If you have any queries, you can write us at research@kirinadvisors.com. Once again, thank you. Thank you everyone for joining the conference call.
Thank you very much, sir. On behalf of Kirin Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.